All right. Hello, everybody. I'm Jeff Gibby. This is Price Headley. Actually, I think he's over there. I don't know where he is for you.
Hello.
Welcome. It's good to have you. We have a brand new GoToWebinar interface, and so I apologize that we're starting a couple minutes late. I think we got it working. I don't. Price is going to share some stuff on his screen, and it's on his screen right now, and I don't want to mess with that. So I'm going to read a legal disclaimer, and I'm going to tell you how much I like Price, and then I'm going to just let him go. I'm going to let him go. So here's the fun part. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for investment decisions based on the use of the software, trading strategies, or information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in this presentation should be construed as investment advice or as a solicitation to buy a security. So there you go. This is my good friend Price Headley. Price and I go back a long time. I've been here 26 years, and for 16 years I've been doing business development and working with our educators and our partners. And Mr. Headley right here is the very first person I reached out to, and we set something up. So it's going back decades now. Price, are you feeling old yet?
A little bit when I hear you talk about that, Jeff. Time flies when you're having fun, right?
Yeah. And it has been fun. That's some of the things I'd like to talk about, Price, just to kind of set some groundwork. I have a lot of respect for Price, and I always say that. But I like more his mentality. Kind of like all of the work that he's done over the years has been geared towards, finding not just a trend or a trade, but ignoring the smaller trades and kind of focusing on the biggest trades and kind of really, he calls it swinging into it. And I just love that as like a mentality, not only for trading, but a mentality that I've tried to implement in my life. So, Price, there's your introduction. Thank you for joining us today. Sorry about the hiccups a little bit. But it's fun too.
Well, thank you, Jeff. It's always a pleasure to be with you. And like you said, going way back to a couple decades plus ago when we created the BigTrends Toolkit for MetaStock, really starting to factor in some of my favorite techniques for finding those bigger fish and leaving the little fish behind, the little trades behind, really looking for those moves that can develop into something bigger. And you and your team do such a great job of helping to take it to the next level. So we've done several iterations, folks, so we'll walk you through some of the newer things that we have in our BigTrends Toolkit for MetaStock. So without further ado, I'll go ahead and get into it. Glad you're with us, folks, talking about big trends methods on the MetaStock platform. As Jeff alluded to, got to talk about a quick disclaimer. Of course, everything we're talking about here is educational and informational purposes only. No recommendation to buy or sell any particular security here. Of course, you're 100% responsible for your own investment decisions. BigTrends and the staff are not responsible for any trades you choose to make. Not all BigTrends products and services are appropriate for all traders and investors. Always keep your risk level in mind. We don't provide any personalized financial, tax, or legal advice at BigTrends, so do consult your tax advisor before you make any investment that impacts your tax situation. So with that understood, what's your biggest challenge in the markets today, and maybe just in general in life? For me, it's information overload. There's too much of it. There's too many things coming at all of us, from all the different media channels, from all the different web pages, from all the different things you hear, see, read, and you have to figure out how do you filter it down to the meaningful few things that are going to really impact, in this case, your trading decisions, right? I would advocate getting rid of a lot of the sources of information you're getting that are just giving you a lot of noise and getting to what's really essential. So for me, in the trading world, MetaStock's indispensable. It's vital because I can reduce thousands of potential names down to just a few at a time that I might want to trade via their scanning, what they call their Explorer tool within the MetaStock platform, to go on that information diet, to give me less being more, right? The best of the best. I'd much rather have a few great quality signals than too many quantity of signals. If you have too many things coming at you, what do you end up doing? Not much or nothing. You basically end up being confused, right? So I would also ask you not to try to multitask while you're watching here. Try to focus, because it's also proven that multitasking lowers your IQ. Our goal to raise your trading IQ here. So you can see the BTTK stands for BigTrends Toolkit here. Jeff and his team helped me put together about a dozen key elements. So within that, really, there's a core group that we're going to focus on today that I use to drive my trades. One of the first ones I use is by Larry Williams. Larry, another great trading innovator and educator. He developed this tool called %R, meaning percent range. Where's a stock trading within its recent range as a percentile? So if it's at the exact high of its range, it's going to be at 100% effective reading. For Larry, it was actually a high reading of 0 down to a low reading minus 100. You'll see with me, I usually like the grade school scale, but I may have his original scale in these examples here. But basically, it's kind of similar to, you may have heard, stochastics, where you're looking at kind of the oscillating, overbought, oversold conditions that go back and forth. But the irony is that I found that my best trades, like Jeff alluded to, the biggest trends, the ones that keep going more than you would expect, they tend to go overbought on the bull side, and then they tend to stay overbought. So for me, that's overbought above this 80th percentile here, this top 20% of readings, or in the classic Larry Williams scale, that'd be from 0 to minus 100. Yeah, 0 to minus 20 here, I've got it right there, that's a past example of MasterCard. So here we've got like the %R, and I adjust my settings a little bit. So basically, the principle is you want to see something go overbought, and when that happens down here in the bottom left in a prior May, if it keeps going up, that means it's telling me the institutions, who, let's face it, institutions drive the market, and if they keep buying even when it's overbought, guess what it means? It means they've got a lot more to buy typically. They're going to keep building their exposure to this name to the upside. And every time it tries to pull back under that overbought threshold, like it did here May 14th on this chart, kind of the middle of this left side of the page here, that pullback is what I call a bull retest. That low must hold going forward on a close by close basis. If that low does not hold, if we close below it, that violates the whole uptrend structure, the big uptrend structure I'm looking for here. It does end up being a great retest. And so think of what retest could be for you. Not only a place to reset your stop if you're already in the trade, better yet, if you're out of the trade, you've been on the outside looking in, it's a place to build a position, add a position, start a position, because if it violates, you can stop it out real quickly, right? I love trades where I can get on and know very quickly I'm going to be right or wrong very fast. If I'm wrong, get out quick. If I'm right, keep riding. You just got a wonderful re-entry point within this trend. See another bull retest in early June on this chart for MasterCard. It may well trade below there in a future day. This is a daily chart. You can do this with hourlies. I use hourlies a lot with this too for swing trades. But you can see here, this was a multi-month move, and it broke a great re-entry, broke out again to the upside over the next couple of weeks. That last one there, June 25th, that retest just bumped around, didn't do much, and ended up violating and ended up stopping out at a small loss, or break even a small loss. So bottom line is that you will eventually have a loss with this method. That's okay. I don't mind losing small for the opportunity to win big. That's the philosophy you have to go into. So don't ever put all your money into any one trade. To make your trading capital allocations on each new signal you get relatively small, and then just be true to following them. If they're a big move, give it a chance to turn into something much bigger than you or I could have expected. That's what the big trends usually do. They go much bigger than I would ever expect, or most would ever expect. And then if it's wrong, never add to a losing position. If it's wrong, stop it out, admit that it broke, and get rid of it. A lot of what I'm trading, I've been trading for 35 years and 25 years since I launched BigTrends in November of 1999. Bottom line is that the big lesson is that if you add to a loser, you're basically throwing good money after bad. You're trading market structure. If the structure breaks down, you see where it does break down here, where that retest, it keeps drifting below there. The next time it tries to test back above, it doesn't really get through that high. And so therefore it's just the top of the range. So change from an uptrend to a top of the range. And I don't want to trade ranges. I want to trade big trends. Now here's an innovation that Jeff and his team, I came to them and said, hey, I want to take the %R and I want to turn it into something that I'm calling big trends bands, which basically means what? It means that upper top 20% line, what would be the 80th percentile, is this upper blue boundary. This is a past chart of Apple. The bottom blue band here is the 20th percentile, essentially the low end, right? So if it's breaking out above that upper boundary, that's a big uptrend. If it's breaking below that lower boundary, it has a potential to be a big downtrend. Sometimes they look like a trend and then they quickly fake you out. You take a small loss, you move on. But you see the huge moves to the upside in the left half of this chart, and a little bit of an up move there that we caught in the second half of the chart. But point being that it tells you when to trade the big trends outside of those big trends bands and when to stay away if it's in between the bands. If it's in between, I just assume that's like what's expected. That's not going to be clear enough. It's not giving me a strong bias. You want to have a big trend bias up or down when you trade stocks or options. You can see that they did a great job too at color coding down on the bottom. We've got some other filters where we wouldn't even take those bear setups if the longer term trend was up. So it was only telling you the really green phases where you had your best trends, February, March, middle of May, through that really quick power surge there, and mid-August with a couple of quick surges that were a little bumpier, but still net positive. So the point being that those were the best of the best. And we're going to talk about those some more. Because here's another example with Apple where you see really launching through here. And then Jeff and his team helped to create something we call the BigTrends Score, which basically takes into account more than just my version of the Williams %R getting outside that into that top 20% of the bullish readings, right? It's the 80-20 rule. You've heard of it before, Pareto's principle. The top 20% of your trades, or in this case, the top 20% of the signals outside of those upper bands are going to generate 80% of my bullish profits, especially if I'm an options buyer. Options buyers, those big moves will generate a lot. The other moves will chop you around some. So the point is we want more of those out of the bands, out of what's expected trades, and we want less of the others. You can see that big trend score then adds in all the other components. I said to Jeff, hey, this is giving me a nice stream of income opportunities with this big trends bands %R perspective. But now let's add in the other tools that I like to use, like the directional movement lines in ADX, the commodity channel index or CCI, the variety of other tools that I've used effectively, and said, now put all those streams together into one much more powerful river that we call it Big Trend Score. When it's in the top 20% of the Big Trend Score readings, that's where you're seeing this all green, all clear type of a signal. And you see it catches that verticality in Apple as it moved up in a prior phase, almost day after day, almost with no give back for about 2 weeks, right? So yeah, this other one you see started to go and then quickly reversed back down and knocked you right back out, right? So you'd be in and right back out if it doesn't work. That's the objective. Looking back over longer periods of time, you can see it's geared to catch those kind of steady vertical phases when we're seeing it's staying very overbought and very powerfully bullish in those past phases. And I was having some computer challenges, so sorry I had to get some older examples to set this up, but maybe at the end, Jeff can come in and help show me, and show you NVIDIA and a few other ones in the current platform. So you see that we've got a variety of components from the %R, the commodity channel index, the efficiency ratio, acceleration bands that I created, John Bollinger's Bollinger Bands, ADX, DMIs, moving average filters, and additional directional movement filters. So you got a lot of things happening there, but it's like, hey, sum it all up. And when you get more than 8 out of 10 of those things firing, then you're going to be looking for some pretty powerful trend direction here. So another prior example of Facebook before it was renamed Meta, you can see again, caught Facebook on a breakout. Then all the big trends bands kicked into gear partway through that move, and then you see caught that big gap up a few days later. Part of trading wisdom, there's an art and a science. This is more of the science piece, the data piece of your trading. You'll learn the art of trading through time is that basically when you get gaps in your favor, I'm a big believer in taking partial profits. Like if I buy options, anytime I can double an option, I'll sell half of my option position out of the double any chance that we get. And we get plenty of those at Big Trends. And the idea is that if you sell half of it at a double, you create a free trade, right? If the other half flips and like say you were riding this one and it flipped on down over the next several weeks, never coming back off that upside gap right there in late July, then you're not sweating it, right? Because you've already taken your risk capital and put it back in your pocket into your account. the safety of cash, right? And so then you've got a free trade, see if it keeps going. If it doesn't, this one actually gave you the buy exit about 3 or 4 days later, and you won't make as much as you made on that gap up, but you still salvage a healthy gain on the rest and move on to the next opportunity, right? So flexibility, not getting stuck, not falling in love with any of your trades, just basically saying, hey, I don't care how much you love a stock, love the management, love the product. We're trading here, right? Trading is for the nimble. You want to stay flexible and nimble. And when it says exit, like this one did, especially if I'm in options and it just flatlines like that, that's not the end of the world if you own the stock, right? But if you own call options, then every day that goes by and nothing's happening, if it's near the money, that's time that's going to waste. You could also have that capital in somewhere else at a better opportunity instead of just flatlining. Here's a past example with Alibaba. You can just see it was all kind of all green ahead, and more recent times it's been more red than green for Alibaba, the Chinese Google, if you will. But basically, you can see several different points along the way where we had not just % R breakouts, but of course, BigTrends Score breakouts in the top 20% of the readings. Some of them were longer lasting than others, but you get the idea. This is interesting because this was a prior election with bonds, right? This was before Trump got elected last time at the end of 2016 in the nail biter between Trump and Hillary Clinton. And you can see probably another nail biter this time too. But regardless of what happens, you can see the market was already selling off in bonds before that November election. And you saw it just got pummeled even worse through November after the election, right? So the market will tend to tell us even before the news hits. So be paying attention before the first bit of November for this election of which trends are moving to the upside or the downside, and don't bet on big reversals of those post-election. The market will probably discount that in effect. Now, the gold chart's totally different now than it was back here. This is way back when in late 2016, but you can see this was catching some downside moves in the yellow metal ETF GLD. Now it's been much more bullish. We'll try to take a look at that before we're done. But you can see now the downside occurs, the red confirmation, when the bottom 20%, all the readings are mostly, the vast majority of readings are mostly pretty strongly negative, and you've got just steady wash out below kind of loss of support and steady declines, right? Here's the gold, then reversal back to the upside, where then it went from a slight negative, quickly stopped that out, and then basically right off to a nice little late August, early September run in a prior year to the upside. So even a stock like General Motors, we got GM here, right? GM, is not a name that I would usually consider to be a growth stock. But when all these indicators line up together, boy, look at how powerful that can get. And that was in a September weak seasonal month like we're in now, and looking at, wow, look at that thing just rip to the upside, staying way overbought on all the indicators. This is the big breakthrough. If there's one thing I want you to take away from my talk and sharing with you today, over 35 years of trading experience for me, is that overbought is not a bad word. It's not a sell opportunity necessarily. In fact, if it's a really good trend, it can be highlighting that indeed it might have a lot more to go as the institutions just keep adding it. Because think of it, institutions are just like you and me as individuals. They want more of a good thing, less of a bad thing, right? Now, when you convert these ideas into an option trade, I like the simple stock substitute approach of an in-the-money option. And so in this case, if I was bearish, if I was thinking something's going to drop, like XYZ stock, I think it's going to drop and say it's trading at 56.6. I don't buy the way out of the money, cheapies that I need to make a huge move in order to get paid. I tend to first gravitate towards the in-the-money option. So if I buy a 60 put, say out to the December monthly expiration, third Friday of the month is the monthlies. Now we have weeklies too, but the third Friday of December is the expiration. I give myself 2.5 months to go, almost 3 months to go before expiration. I buy a 60 put. It's already intrinsically worth 340 down at 56.6, right? 340 of my $470. If it doesn't move a penny by the December expiration, I still retain $340 out of the 470. Obviously, if it goes above 60, I'm totally wrong. So you got to have a plan to get out of these before the expiration. But in this case, 340 out of the 470 works out to more than 70%, almost 80% actually of intrinsic. I'm sorry, 70%, 72% of intrinsic value. About 28% of this option, 130 of the $470 is what's called time value or time risk. So nothing happens, you would lose that. Now you see Stock drops to 50, gets about just under a 12% gain. You'd turn the in the money option in from 470 to be worth at least $1,000. You'd make 530 before commissions. That'd be 112% gross return. So the point of it is that you can get oftentimes not just 5-to-1, but 8-to-1, 10-to-1 leverage, even on a relatively more stable in the money option. It's my preferred way, especially if you're just breaking into options to trade. Looking back at some of the financial crisis names, it's interesting looking back at like a Bear Stearns, BSC, lived up to its name, right? Went very bearish. Stock dropped. This case dropped, start of its drop from the mid 150s. Our signal didn't hit here until we finally got the confirmation and it broke down here about 130. When it bounces back up to test above that oversold line, that's our retest. So that's another low risk entry about 125. Another breakdown near 100, 101, comes back up for a retest. That retest violates, stops you out about 116, 117. So as you know, Bear Stearns ended up going down to like $2.50, $3, right? So you look back at this is where it got absolutely pummeled. March of 2008, Bear Stearns breaking down, gave us our sell signal out here near 70 on the percent R breakdown, and then kept dropping. These are my acceleration bands in blue. And you see it outside those bands. That's where you really got to say, watch out. We've lost all support in this one to the downside. Who knows how low it can go? Now, nobody would think it would go as low as it went, but that Friday on March the 14th, it dropped to $30 at the close. The options were priced for almost Armageddon. The options were so expensive, and they turned out to be right because over the weekend, JP Morgan offered $2 a share. The stock opened at 3.5, ended up getting bought out closer to $10 a share as they had to raise that bid. That was too low. But that showed you the kind of fear that was out there on Wall Street. But the more important thing was that this is an example where I made a mistake. I got a double on this one, and I took the whole double out because I thought the options looked expensive. I should have held half of my position and made way over a double, like more of a 10-bagger. I blew it on this one. I only made a double. So the bottom line is that really taught me, hey, even when you think it's washed out, it's only half of the double, letting the rest run until you got other logical exit criteria. Usually you're a better bet than taking the whole winner off too quickly. I see way too many take money off the table on their winners too quickly. Meanwhile, I see way too many people holding their losers way too long. You got to do the opposite of those. Cut your losers quick, hold your winners on a piece of your winner longer. Efficiency. Which of these trends would you rather buy a call option on? Say I've got a volatile tech stock that oscillates a lot in red, and then I've got a slow, steady grocery stock with almost no oscillation, just slow and steady, snail pace comparatively, but getting to the same point from the beginning to the end. Which one do you think is going to give you a better bang for your buck on a call? The information being if it's a tech stock, it's got more volatility. Say it's got a 40% implied volatility. Say the black stock's got a 20% implied volatility. Well, the half of the black stock in 20% volatility would be half the volatility. For the same move, paying half the volatility, you actually get twice the bang for your buck on the slow, steady black stock from beginning to end rather than the red, more volatile, twice as volatile tech stock. So I'd rather buy the call on the steady, efficient trend, not on the volatile, hope that it doesn't go against you trend, right? So here's an example of efficiency. It's in the middle panel here in green. It's another tool that makes up my BigTrends Score. You can see that this was silver back in the day when silver was in a very efficient uptrend, staying above this plus 30 threshold, retest back into it, holds it. Only when it came out of that and violated here to tell you to exit right about this point here in early May of that year. So great move in silver. Obviously, we're having another great move in the metals overall. You see, like this one was only short-lived and then quickly knocked you back out. So that one didn't do much. But that's the point. Some of these will do a lot. Some of these will kind of chop around and make a little bit, lose a little bit. But it's those top 20% of your trades that are going to generate the bulk of your return, especially as an options trader. Another interesting tool that Jeff and his team helped me code in the BigTrends Toolkit is the percentage above a long-term moving average, like a 200-day moving average. If I told you a stock's 100% or more than 100% above its 200-day, you would say, oh, that's way overbought. And this is actually an interesting one because I actually went on Fox News and said, I've been on Fox a bunch of times over the years, and basically I said, hey, we've got a buy signal on these shippers, dry ships, and TBSI. I actually recommended TBSI. The stock had more than doubled already to get that kind of an overbought reading. I said, I think it's going to double again. And all the other guests said, you're crazy. It's way too overbought. They all said it was way overbought. Guess what? Overbought went way more overbought. These both more than doubled. The MetaStock Explorer scan actually was what helped me pick these up, right? So it's an invaluable tool at MetaStock to make sure you're catching the newest big breakouts to the upside. And this is when I called out TBSI, right? I was on there on Fox to say, hey, you got a new buy signal back in that June. It was around $20. Like, oh no, the stock was just at $10 a few months ago. You're crazy, Headley. Well, you see, $20 turns into $45 from mid-June to mid-August, early August, right? Less than 2 months later, it's more than double. You see, staying overbought above that, we had multiple re-entry points along the way, but you can see this thing was just a beast as the shipping stocks were so strong. So the BigTrends Toolkit really is a vital element of my strategy to go weed out what are thousands of potential tradable names. And certainly in my even options universe, I would say there's probably at least 500 optionable stocks that I would consider worth trading. And of course, we got a lot of ETFs, a lot of other tools. And Jeff and his team have done such a great job of helping code in these various techniques that I've used. But, you know, percent R, the efficiency ratio, my acceleration bands, you know, use the percentage above the moving averages, a lot of these tools on a regular basis, and then some other tools to go with it to really help to show you how you can really find these, benefit from it. And so what I'm hoping, Jeff, that we can do, I know I wanted to give that overview, so maybe we could bring up the current platform and the current markets and talk a little bit about what's been moving here in 2024 when you look at NVIDIA and you look at the other big tech AI trades, and maybe just a little look at the markets as well. So if I've got you with me, Jeff, maybe we can.
Yeah, I'm right here. Yeah.
That.
Here we go. Can you see
oh, wow. I love it.
Yeah.
And look at how good that looks, folks, with the May and early June move in NVIDIA, right? It had that other move earlier in the year, but bottom line is that it shows. So you see, I mean, it's if you look back at these charts, and we all do this, don't we? Basically, look back at chart. I wish I'd been on that thing, you know, on certain moves where you either weren't aware of the symbol, weren't really paying that close attention, or worse yet, maybe you were thinking about it wrong and thought, oh, I've missed it. I should have bought it lower. Now it's run too far. Now I feel dumb if I buy it higher. Guess what? There's institutions all the time that keep buying and buying and buying. And our job is just to say, let's stay with it until it says it's over, right? So what I see right now is a lot of people hyping NVIDIA. And Jeff pulled up what this really cool feature over there on the left, which is the BigTrends Score breakdown for NVIDIA right now. And you can see a lot of neutrals, one bullish on the moving average, but one bearish on the efficiency ratio. So now you have actually a very mixed reading, which is why that BigTrends Score is coming in around 0, kind of stuck in between the plus and minus 100 thresholds, kind of in a no man's land, right? And you can see it's actually near the top of my BigTrends band, that top blue line. It's basically kind of range bound. And yet a lot of people are hyping it right now, talking about that they think this is just a pause and that it's going to go again. And it may well. I can't predict the future from where we sit right here. What I can adapt to, what you can adapt to when you use the BigTrends Toolkit and use these eye openers to say, okay, do we have the all green go ahead yet? Here we do not right now. And you can see you had it in January and February, you had it in May and the first part of June, first 2/3 of June, with a verticality, right? So whether you're trading the stock or whether you're trading the options, you have a huge opportunity to take advantage of those. If the green light goes off, goes yellow or red, you know, and in this case, it doesn't, it just goes back to blank, right? It goes back to neutral. That's your signal to say, I need to be out and moving on to greener pastures, literally greener stocks that are giving me a more likely signal. So you can run scans with this and you can run them through. How about another one, Jeff, looking at another big tech name, SMCI, Super Microcomputer was one of the biggest movers, late last year and early this year. And let's go take a look. It's negative now because they have accounting issues, right? So this is why you don't buy and hold these, right? But you go back and look at January and February, you talk about verticality. You talk about, okay, it was kind of just Deadsville for a while. And then all of a sudden, this stock just started to go vertical from the 400s up to 1200 in a matter of 2 months, right? It tripled. And that's just a stock, right? If you're trading options, you've got so much more opportunity to leverage and control risk compared to this. And then now zoom it ahead. Now look at where we are today.
It's
Jeff,
back to 400.
it's
Yeah.
amazing how now they've announced accounting issues. They didn't exactly soothe the accounting worries, and you've had a couple of phases. It's bounced a little bit, so it's coming out of that red zone now. But you can see the first week of September here, it was like, okay, it had some risk, where basically it's not surprising that these stocks can round trip when they get the negative news cycle going against them after the big positive cycle. Of course, the positive cycle was all about AI, all about artificial intelligence, all about how many chips they're going to be supplying for the next big tech companies that are in this AI, artificial intelligence arms race to try to take over the whole AI space. So it reminds me of what are some of those other companies. So what about Apple now? If we look at AAPL, Apple, of course, had their own little time where they announced what they call Apple Intelligence, their version of AI. And of course, they just announced the new Apple 16. And you can see, looking back there to May, June, even part of July, Apple was fine. Apple was definitely doing a great job of catching that wave. And then you see, once that started to end there about the middle of July, it got dicey, right? And then it turned out that Warren Buffett sold 49% of his holdings in Apple, and the stock gapped down from 220 to 200 there in late July, early August, I guess it was. And it was right at that short-term low, it turned out. But you can see this is basically just a trading range stock right now, despite the hope or whatever your feelings are about the new Apple 16 phone, about the new watch, the new AI interface that they're trying to tap into. Point being, I wouldn't touch it right here because you can see it looks kind of range bound. It looks like it doesn't have our BigTrends score behind it anymore. So I'm not saying I don't think Apple's a great company. I do. But I'm saying that there's a time to trade a great company's stock, and there's a time not to trade. And so that's what you learn as a trader, is that it's about timing. And that's what this tool and all these tools that MetaStock has via our BigTrends Toolkit for MetaStock gives you that eye opener to say, oh, yes, I should be a part of this move. Oh, no, I should wait. So it's okay to wait and to buy it higher, especially if you're using leverage with options. I'd much rather wait and buy it in the right sweet spot and get the leverage working for me and for you than to buy it hoping for an eventual breakout and not get it, right? So then you can look at, I'm trying to think of some other, how about bearish names this year? What about a name like Walgreens, Jeff, WBA? Walgreens, it's been a stock that's been beleaguered here. And you would say, okay, look at, and at the start of the year, if we zoom back to the very start of the year, they cut their dividend to start off the year. Didn't get the year started in a very good way. And then you see a couple of times where it's just steadily downtrending, steadily telling us that you should not be bottom fishing in this one. At the end of the year, some people were saying it was on people's value list because they had almost an 8 or 9% dividend yield. Then they cut it in half. So that's that first gap to start off the new year. And then basically our systems said, yeah, watch out. You see right now it's kind of just in this no man's land, but still not one I would not want to bottom fish on any of these names if you're in that mode of saying, is there value? The value buyers, not only will you be risking being against the trend in a situation like this, you will also risk just getting stuck sideways for a long period of time. So as we think about let's go back to a couple other bigger names. How about as we look at, let's look at the market, Jeff. If we just pull up SPY for a second, then we'll also take a look at gold, GLD. You look at SPY and you say, okay, look, SPY looked really good May, June, and part of the first part of July, right before those inflation prints started coming in and made people question if indeed the market could see the Fed finally start cutting. We know the Fed's going to cut a quarter point next week. The part of the concern in the recent little sell down before it reversed yesterday was that it's probably not going to cut 50 basis points. Probably a 10 or 15% chance of that. Probably won't happen. Probably will be the quarter point. I think the quarter point's logical anyway for the Fed. But what's more important here is to say this is not yet in a strong buy. It is giving us a Williams percent R breakout today. That's a good thing. But you see all that overhead resistance. I'm not going to try to be a hero. I'm going to wait a little bit, even though the SPY is acting pretty firm right here. Nice reversal yesterday. It was actually the best reversal from down more than percentage per day yesterday morning to up more than percent by the close. First reversal we've had like that since late 2022. So that was a nice big outside day reversal to the upside, bullish engulfing bar for you candle followers yesterday, and a follow through day today to say, yes, %R does say to buy it, but I'm saying that the rest of our tools, you see, we're only at 20% on our BigTrends score up on the top right. So we've got some work to do for the S&P to be back into that easier uptrend phase. And of course, we have the election looming. We have waiting for the reaction of the Fed. What about gold, Jeff? Let's look at GLD, the gold ETF that tracks gold bullion, the yellow metal itself. And what a nice move today in that one. We're getting close to one of those green phases. You can see we're up to about the 70th percentile at today's close. And so that's getting to where we might well get some strength. The BigTrends bands have been holding really well. You see a couple times where they close back underneath that upper blue boundary there in mid-August and then early September. But those are what I call retests. The retests, I mentioned retests at the beginning when we were talking about %R. Those little pullbacks underneath, as long as we don't close below those lows, we're still good. That was a nice little, I don't know how many of you follow like the IBD Investors Business Daily cup and handle pattern, but boy, you can see a beautiful cup and handle on this chart, can't you? I know you see it, Jeff. You got the cup, and back in July, you've got the little breakout in the middle of August, a nice little handle in late August, early September, and this looks like a nice breakout of that cup and handle pattern. And this is why I love these tools that are more quantitative. Yes, we can talk patterns all day, head and shoulders, flags, cup and handles, ascending triangles. You can talk patterns till we're blue in the face. But here we go. This shows us that this showed us a nice breakout here in the BigTrends bands here today, and that was a nice breakout out of a congestion zone. I'm a big fan of gold, even with all the inflation data suggesting that inflation's gone. We don't have to worry about inflation. Guess what? The Fed's going to try to reflate to start to pump more money into the economy and take these rates back down, and more importantly, that's going to create more inflation. They're trying to walk that tightrope between not too little inflation, right? Deflation's a bad thing. They don't want another deflationary, depressionary type of an environment, but they also don't want runaway inflation either. So it's an interesting dichotomy that they have to walk that line between growth and inflation here. But you see, that's a beautiful looking chart. What about TLT? If we look at the bond market, Jeff, TLT is the 20-plus year Treasury bond ETF. And it's been performing recently. Look, we're on a nice little green BigTrends score buying zone with a nice little retest today. Sure, that green stopped, but I'm okay as long as that retest today's low holds to say that TLT can keep on trending up. Remember, if bonds are going up, that means rates are going down because they pay a fixed dividend. Therefore, higher TLTs prices mean lower yields. So that's actually great news, not just for the bond market, it's great news for the economy. And ultimately, I think it's an underpinning why the stock market almost refuses to show a whole lot of weakness on a persistent basis because rates are coming down. We've endured that pain. Let's zoom it out a little further, Jeff, if we go back to maybe even last year on the TLT. But you see that even that red phase there you go earlier in the year, and you can see that even back in late 23, that a couple of those bearish phases where we just were really getting pounded there as the Fed was pouring on more pressure to the rates and raising rates, and the economy was slowing. Not dramatically though. The economy did a remarkable job of holding up. Right, we still were positive on jobs this past month, just a little bit underneath expectations, like 146,000 added versus like 165, 168 expected. But the point is that I think this economy is incredibly resilient. I think that this bond picture improving is an encouraging sign for equities, and I'm bullish on gold too. So I think there's a lot going on here that's to be bullish about, and to say, okay, let's pay attention to these big markets as we look forward into not just the end of this year, but also into 2025, which I think is structurally going to be a good year for equities, regardless of who or whom our new president will be. I mean, you've got all kinds of opinions about which president's going to be better for the economy, for the stock market, et cetera. But while there will be some sectors that probably win more or lose more comparatively, I think the stock market is going to be fine, because what does the stock market know about both of these candidates? It knows they're not going to stop spending. They're going to keep spending, which is why I still think gold keeps going up in the face of lower inflation data and lower inflation news, is because people know, well, the government's still going to keep printing it. to keep pace with our record deficits. And so therefore, gold is a means, a store of value, if you will. So, I'm in kind of a buy the retest mode on any kind of GLD pullbacks, especially. So, it starts to give you some ideas about like how you can start finding these. And maybe Jeff can show you a little bit about how you can go through and run explorations based on tools like I've shared with you today, so that you can start finding these opportunities on a recurring day-to-day, week-to-week basis to say, look, there's plenty of them out there. You just need to know where to look. A lot of this is about raising your awareness. You need to make a bit of an investment. It's not a big one, but a bit of an investment into having the right kind of information source to raise your awareness on the next big trend up or down. I think the BigTrends Toolkit is a phenomenal value with what Jeff's got to share with you today. And I think he can do a better job than I of kind of walking you through some of the key elements of how the toolkit works within the MetaStock platform. So I'm going to say thanks for having me, Jeff, and let me hand it back over to you so you can walk folks through that.
I appreciate you being here. That was great. I really enjoyed that.
Thank you.
Thank you. Enjoy your function tonight.
Absolutely. I appreciate you adapting with me here.
No worries. Of course. We've been at it for decades.
Always a pleasure. Thank you so much.
One of the biggest questions we always get is, how do we do scanning? And how do I find these? And how do I kind of do those? And so I'm going to show that. As we get to do that, what I'm going to do is actually I'll talk a little bit about what's included with the BigTrend Toolkit. So we have the third version of the BigTrend Toolkit. And as with anything that we've done 3 iterations of, it's been something that's been super important or super well received in our database. And this, of all of the BigTrend Toolkits that are out there, is the most complete. We have the most systems in there, the most methods, and we've done the most revisions to it as well. So I wanted to give you a list here of the methodologies that are part of this. And you can see kind of it uses some force index, Bollinger Bands, his acceleration bands, the BigTrend bands. There's all kinds of different methodologies. So when I say methodologies, these are methodologies that are fully built into the software. So if you want to scan, as Price showed, for stocks that are above the 200 or the 400-day moving average, you can do that. Over the iterations, if you want to learn about efficiency, I love the way that Price talks about efficiency and shows how kind of you want to find stocks that are kind of moving more efficiently. He uses an analogy that talks about kind of driving on the freeway. Are you going to be able to go faster during rush hour or slower? And which is preferable, right? All of these have complete expert advisors. They've got system tests. They've got scanners. And you can run them all. It's a very, very complete toolkit. One of the things that we kind of did for the last one was what Price was talking about, that score method. And with the score method, we basically take his favorite indicators, the Williams percent R, 2 days ago, the Williams percent R, the CCI, the efficiency ratio, acceleration bands, we combine those into a score. And I really liked this as an idea. And so with all of the scans, not just the one that does the score breakdown, with all of the systems, what I did was I kind of went in, and when you run any of these scans, regardless list of which BigTrends Toolkit scan you run, it's going to have that score. So let me show you how to run a scan. It's pretty easy with MetaStock, and I think MetaStock has one of the best, if not the best scanner out there. So what I'm going to do is I'm going to click on the Power Console right here. That'll bring up kind of like a control window. We call it the Power Console. And what I'm going to do is I'm going to come to the scanner right here. So that we call it Explorer in MetaStock. We go ahead and click on that. Okay. I'm going to go ahead and I'm kind of debating in terms of which ones I want to run. But what I'm going to do is I'm going to go to BTT. Okay. Oh, there we go. BTT3. And all of the explorations that you can run are going to be basically BigTrend Toolkit. They're going to start with BTT3. So let's go ahead and look for just the BigTrend Toolkit score. I think that's fine. It kind of mends well with what we're talking about. And what I'm going to do is I'm going to look at just a small list. So this will run really fast. We can kind of get it with some results to look at, et cetera, et cetera. So I'm going to run the Dow Jones Industrials. I'm going to run the NASDAQ 100, and I'm going to run the S&P 500. So let's go ahead and do that. This isn't going to take very long, but it'll take a minute. I'm going to grab my coffee right here, and it's just going to go through. And what this actually does is it's going to go ahead and tell us what the score is for any of the components. So if I want to kind of look at the score alone, this won't have setups. It'll just tell me what the score is. That's what we can run. Now, I can, of course, go in and run for a setup or trigger or that kind of thing as well. So let's go ahead and let it run. And it's almost done. All right. Coffee's a little old. So here we go. We've got the BigTrends score. If I just want to see these stocks, I want to rank them in order of kind of what the score is. I can go in and I can kind of come in here. Dollar General has a -90. If we come down to Ventus, this actually has 100. Welltower has 100. Cooper has 90. Oracle has 90. So let's kind of take a look at just maybe the first two. Okay, we'll go ahead and open those up. Kind of take a look at them. There we go. So here's Welltower. You notice the expert advisors is completely already done for you. Right here we are in the green zone because this is a perfect score of 100. You can kind of see where the setup generated. You had a buy signal here. You had a re-entry opportunity. That's what this triangle means right here. And we're currently long. Now, one of the things, based on the BigTrends Score method, one of the things I really like about Price is the way he kind of structured his commentary. I remember, like when we were kind of putting together his initial commentary, I was like, okay, here's what it does. It's designed to help people understand what's going on a chart. And you can do all kinds of really good stuff. And he understood the lesson perfectly. He, in fact, when I show examples to other partners of good commentary, I'll show them this one. So I want to show it to you as well. So like if we come over here, the BigTrends score is 100. Kind of breaks down the BigTrends score as a combination of 10 of Price's favorite indicators. Kind of breaks down everything. Right now, they're all bullish. So we've got a little bit of a dashboard view right here. And it's just going to say, this is bullish, 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 bullish. You're currently in a long trade. Your current stop would be 119.93. Kind of gives a little bit more of a breakdown. Now, I kind of want to also show you a little bit more about kind of like what would happen if you actually got a trade. So if we ran a scan for the actual trade, this stock would have come up right here on 827. Let me go ahead and click on it. And here you got that same breakdown. But what I wanted to show you is kind of the help. And I believe this is really helpful, but the help that it kind of gives in terms of helping you understand as an option trader, kind of some of the options. The options that are available for you. There's a lot of options in that sentence. So right here, the BTS, and we are looking at this day, this buy signal. That's where I moved it back to, just to be clear. The BTS indicator has recently crossed over the 80 and the price has broken above the high. That's the signal that we're looking at. Okay, this indicates a potential long signal. If you're interested in taking advantage of this opportunity, you could look to buy the stock. Aggressive traders with or buying a call option 2 months before expiration. So it tells you kind of what expiration dates you should be looking at based on how long you could be potentially in this trade. Okay. Aggressive traders will typically look at call options that are one strike out of the money or near the money that cost $200 or less. While conservative traders will typically consider the call option with more intrinsic money, usually one strike. Traders should look to exit this position when this happens or when this happens. So not only is it helping you kind of identify kind of the tradable stocks and what they're doing, it's kind of telling you why they're tradable, why the system sees an opportunity in it. It's also breaking down different options you'd have in terms of what you should do with the stock, whether that's buying the stock outright, if you're trading it, what actual expirations to look for, what in the moneyness that you should be looking for, et cetera, et cetera, et cetera. And those are true with all of the methodologies. This BigTrends Toolkit is massive in terms of what it includes and in terms of what comes as part of the box. All of these methods are in there. And back in the day, when we actually printed out and had CDs, we've been working with Price since we printed out CDs. That's how long it's been. But since we printed out CDs, the manual that we included with it was so big that it wouldn't fit in the DVD enclosure. So we had to shrink wrap them. Saran wrap them. That paints a picture in my head. We've had to shrink wrap the actual manual on the outside of the DVD case just because it was so big. So all of the systems were talked about it. I remember Price put together a really good chapter on, technical analysis, analyzing stocks, all that stuff is included. It's no longer printed. I actually like the printed manuals, but nobody else did. So everyth's available digital, though. And so you can get it, you can look at it, you can study it. It's a great methodology to look for. So in total, you get the 17 different methods, which include expert advisors, explorations, tests, templates, all of the indicators required to run it. And all of that is available as a one-time cost. So it's $6.99 normally as a one-time cost. As part of the webinar special that we're doing today, you can get it for $4.99. And there's two other things that I think really should be on this slide. I'm going to add them to the slide after we get done. But two things that I think are super important. We'll back this with a money-back guarantee so you can try it. That's been one of our most prolific add-ons that we've ever created. Give it a go. We give you a 30-day money-back guarantee. You can explore the systems, determine whether or not it's going to make a beneficial difference to your trading. If not, that's why we offer the money-back guarantee. If you're new to MetaStock, if you haven't used MetaStock before, I'm going to say a couple words about that. We did show kind of how the expert advisor works, how the scanner works, how simple it is to kind of pull all that stuff together. And it's really, really great at doing that. We'll give you a trial to MetaStock as part of your purchase. So you can try out. The other thing I want to say about MetaStock, because I kind of lost my train of thought, which isn't unusual, but it has been rated the #1 software program in its price category for 31 years in a row by the readers of Stocks and Commodities magazine. So give it a go. If you like it, you can keep it. And if it helps you with your trading, great. I hope you like it as much as I do, because I love it. If you have questions, if you want to do this, give us a call, 800-882-3040. You can go to metastock.com/sales chat to chat with a representative. You can also go watch a little video that I think I put together at metastock.com/BigTrends. So with all that, I want to say thank you for watching. Thanks for being here. I hope you learned something. I hope it was helpful for you. I hope it was beneficial. I hope you're doing well. I hope you're staying healthy. And I hope to see you next time. Thanks for coming.
Hi, Kelly Clement here from MetaStock. Before you go, I have two quick things for you. One, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTubebook, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those two things. Thanks for joining us, and keep on trading.